Welcome everyone. Myself Tafzul Islam Naim, student University of Rajshahi, Department of Finance. Student ID 2310936114. Today I will present an overview of the latest monetary policy statement of Bangladesh Bank for July to December 2025, which is the first half of the fiscal year 2026. In this presentation, I will cover the introduction of monetary policy, the objective of the latest policy, a summary of the main features and the changes compared to the previous half-year policy, the tools used by Bangladesh Bank, and finally, some suggested reforms. Let's begin. Introduction to monetary policy. Monetary policy is the process by which the central bank controls the supply of money, interest rates, credit in the economy. It plays a vital role in ensuring price stability, supporting economic growth, stabilizing the exchange rate, and maintaining overall financial stability. For Bangladesh, this is especially important because our economy is highly dependent on export and remittances, and any instability in money supply and exchange rate can affect inflation and growth. Now we see objective of ACE on FY26 policy. The main objective of July-December 2025 monetary policy are: first, controlling inflation with a goal to reduce it below 7%. Second, ensuring exchange rate stability under the newly introduced fully market-based regime. Number three, restoring the health of banking sector through governance reforms and reducing non-performing loans. And the last, cautiously supporting economic growth with a GDP growth target of 5.5%. At last, strengthening external stability supported by strong remittances and higher reserves. Here we see the objectives of newly fiscal policies. Now take a look at the summary of the policy. Here we can see the repo rate was kept at 10% with SLF at 11.5% and SDF at 8%. Inflation came down from 11.66% in mid-24 to 8.48 in July 2025, but it is still above the target. GDP slowed to 3.97 in FY25, but the target for FY26 is 5.5%. Reserve recovered to $26.7 billion by June 2025. The taka was stabilized around on to 2.8 per dollar under market-based exchange rate. And at last, the major banking reforms are ongoing, including asset quality reviews, board dissolution, and roadmap for IFRS 9 by 2027. Now we take a look at the comparison between S2FY25 and S1FY26. Compared to the previous policy of January to June 2025, changes are significant. Inflation target moved from 7 to 8% to below 7%. Exchange rate system shifted from a crawling peg to a fully market-based system. Growth outlook improved from 4 to 5% to 5.5%. And banking reforms moved from planning to implementation with actual board dissolution and asset reviews. And the most important thing, reserves grew from 2.2 $21.4 billion to $26.7 billion with such a short period. In short, the last policy was about crisis management, while the current policy is about implementation and building confidence. Now we see the tools of Bangladesh Bank. To achieve its goals, Bangladesh Bank used two categories of tools. Here is two categories of quantitative and qualitative. Now we look at the quantitative tools. Quantitative tools include repo and reserve repo, the cash reserve ratio, the statutory liquidity ratio, open market operation, and the exchange rate framework. And the qualitative tools include credit rationing for priority sectors, moral situation to guide banks, prudential regulation on loans and capital, liquidity support facilities, also digital financial inclusion measures such as Bangla QR and e-money. We said together these tools allow Bangladesh Bank to influence money supply, credit flow and financial stability. Now we take a look at the suggested reforms. Mm, From my analysis, some reforms are necessary to make monetary policy more effective. First of all, reduce non-performing loans and adopt the IFRS 9 system quickly. Strengthen governance and accountability in banks. Ensure positive real interest rates so savings are encouraged. Develop the bond market, including suk and green bonds. Expand digital finance and open banking for greater inclusion. And finally, diversify export and incentives remittance to maintain external stability. Now is the final part of the conclusion. To conclude, the July-December 2025 monetary policy statement reflects Bangladesh Bank commitment to stabilizing the economy. The focus remained on controlling inflation, stabilizing the exchange rate, and implementing banking reforms while cautiously supporting growth. Bangladesh has made progress with falling inflation, higher reserve, strong remittance, but challenges remain, especially but non-performing loans and weak private investment. If reforms are implemented properly, Bangladesh can move toward a path of stability, sustainable growth in the coming years. Thank you for everyone.